Welcome back, everyone. In this video, we're going to discuss 3 of the top dividend kings on the market right now, which are Procter Gamble, CocaCola, and Johnson & Johnson. And all 3 companies have just shared their latest quarterly results, and we're going to take a look at how they performed versus analyst expectations and their future expected growth throughout 2021. And these 3 companies have been growing their annual dividend for over 50 consecutive years and have some of the longest active growth streaks in the entire world. They have proven that through any good or bad times in the economy, not only can they return capital to their investors in a dividend every quarter, but they can maintain that growth even through some of the toughest times we've ever seen. And before we move on to that first dividend king, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe, and join the community. And the first dividend king that has just reported their latest quarterly results was ticker PG, which of course is Procter & Gamble. They currently trade for $137 per share, and the company is up around 9.5% over the trailing 12 months, and they have a market cap at $336 billion with a current dividend yield of 2.3%. So this, of course, is the leader in the consumer sector. They've been dominating for decades, and going forward, I think that growth will continue to come in every single year. And we can see over this latest quarterly report, they actually beat on revenue and earnings expectations with a very strong quarter. And they actually announced different price hikes for some specific products going forward in late 2021. So if we take a look at the actual numbers, they reported earnings per share of $1.26 versus the expectation of $1.19. So they beat on 7 cents on the EPS mark. And then total revenue for the quarter came in at $18.1 billion, beating the $17.9 billion estimate analysts were predicting. So they beat on both revenue and earnings, which is a very strong sign. And if we take a look at their actual earnings report release, their total net sales grew 5% year over year, and their organic sales were up 4% from this latest quarter. And as a shareholder in Procter & Gamble myself, I am very pleased to see this growth rate in their total sales. Going forward, I'm no longer expecting this company to expand their total top line by 10, 15, or 20% every single year. Because they're already so large, they're already the industry leader, and they operate in a very slow-moving sector of consumer staples. I think as long as this brand continues to expand their revenue by 4 to 8% per year, I'll be very happy. It'll leave them enough room to continue to grow income, which then in turn means they can grow their dividend back to me in the form of the quarterly payment. And if we take a look, their diluted earnings per share came in at $1.26, which grew 13% over the prior year, which is still a very nice expansion. And their operating cash flow for the quarter came in at $4.1 billion, and their free cash flow productivity was at 106%. And what I find really impressive with Procter & Gamble is that the company returned $5 billion of capital to their shareholders in the form of $2 billion in dividend payments and $3 billion in the form of stock buybacks. So the fact that this company, even as a dividend king, they've been increasing that payment for 65 consecutive years, and their dividend still only makes up 40% of the total cash they return to their shareholders. Many companies who've been growing their dividend for such a long period of time no longer do share buybacks because all of their capital is going towards that dividend payment. But this company is still very strong, extremely operational, and they can afford to spend more capital on share buybacks than their annual dividend. And earlier this month, PG announced a 10% increase to their quarterly dividend, making it the 65th consecutive year of dividend growth for this company, and in total, they've been paying out a dividend for 131 consecutive years since the company incorporated back in 1890. So for 131 years, this company has returned capital to their investors, which is incredibly impressive. And we can see they dominate the market in the consumer sector under 10 different product categories. And over this latest quarter, their total net sales grew by 5%, led by 9% growth in beauty, 8% in fabric and home care, 4% in both grooming and healthcare, and their baby, feminine, and family care didn't really grow that much over the past 90 days. And if we take a look at this dividend king and their current dividend information, we can see at this current share price, they have a yield of 2.3%. They still only pay out around 55% of their net income, which is very low and extremely sustainable. And their 5-year dividend growth rate is at 3.6%. And I'm sure this average will increase after their latest 10% announcement. And going forward, like we saw, 64 consecutive years, add in their most recent announcement, they are now at 65 straight years of dividend growth, which is extremely impressive for this big consumer giant. So definitely a company to take a look at for your portfolio if you want some growing passive income in the form of a Dividend King. And you can pick up the shares right now for a price of $137 each. And now we're going to move on and take a look at the second Dividend King that just shared their latest quarterly earnings. And that, of course, is Coca-Cola, the leader in the beverage sector. They've been operational for over 130 years, and they sell products in over 200 countries and territories all around the world. And ticker KO currently trades for $54 per share and is up by 12% over the past 12 months. And they have a market cap at $232 billion with a current dividend yield of 3.11%. And over the latest quarter, Coca-Cola beat analyst expectations for both revenue and earnings, which is a very strong sign from the beverage leader. And if we take a look at the numbers, their total EPS came in at 55 cents versus the analyst expectation of 50 cents per share, so they did beat by 10%. And their total revenue for the quarter came in at $9.02 billion, which was up from the $8.6 billion expectation that analysts were predicting. So a very strong result from Coca-Cola, and they beat by a significant amount on both top and bottom line. And if we take a look at the actual news release, their global unit case volume was even, so it was very close to the prior year number, which is still a very strong sign. And total net revenues grew 5%, and organic revenues, so the non-GAAP number, was up 6% over the latest quarter. And the company reported comparable currency operating income growth of 7%, and their operating margin on a comparable basis slightly improved as well by 0.3%, and it currently sits at 31% overall, which is a very strong sign. And EPS, the non-GAAP measure, grew 8% to 55 cents per share, and the company's cash flow from operations came in at $1.6 billion, which was up from $1.1 billion in the prior year, and their total free cash flow came in at $1.4 billion, which was up from $1.2 billion in the prior year as well. So the company saw revenue growth, earnings per share growth, and total free cash flow growth over the latest quarter, which is extremely impressive. And if we take a look at their dividend, currently yielding over 3%, paying out around 78% of their total net income, they grow that payment, averaging around 4 to 5% per year annual growth, and they've been doing it for 58 consecutive years, and that's why they are a true dividend king. So Coca-Cola, we all know this company. I'm sure we've all consumed their products. They've been operational for over 130 years, and you can find their goods in almost every country and territory all around the world. So Coca-Cola just reported a strong quarter, and you can pick up some shares for right around $54 each. And now we're going to continue on and take a look at the third and final Dividend King included in this episode that has just shared their latest quarterly results, and that is ticker J&J, which of course is Johnson & Johnson, the big healthcare company that dominates their industry with different consumer products, medical devices, and pharma sales. They are a beast that has no signs of slowing down anytime soon, like the first two companies we've already gone over. So J&J currently trades for $166 per share, and over the past 12 months, they are up by just over 7%, and they have a market cap at $428 billion with a forward PE of only 17.1 and a very nice dividend yield at 2.5%. And they shared their latest quarterly results as well, and this company, like the others, beat on both the top and bottom line from analyst projections. And the company also shared $100 million of total sales over the past quarter, which were related to their new vaccine to help fight the pandemic. And if we take a look at the actual numbers, total earnings per share came in at $2.59, beating the expectation of $2.34. And their total sales came in at $22.32 billion, topping the expectation that was set at $21.98 billion. So over the past quarter, they did a nice job of beating the analyst expectations by a decent amount. And if we take a look at J&J's latest earnings release, we can see the company's $22.3 billion of total revenue on a global scale increased 7.9%. And if we exclude any acquisitions, organic sales still grew 6% year over year. Their diluted earnings per share came in at $2.32, which was up close to 7%, and their adjusted diluted EPS came in at $2.59, and that was up 12.6% year over year as well. And they operate in three main business categories, which include the worldwide consumer health sales, which made up $3.5 billion of the total top line, and that includes Listerine, Aveeno, and many more. They also had $12.2 billion of worldwide pharma sales and $6.6 billion from sales in their medical devices. And the company actually increased their guidance for total revenue throughout 2021, and they gave new levels coming from the latest April report, where they're projecting 8.7 to 9.9% operating sales growth over the latest year, and going forward, the adjusted reported sales are expected to come in between $90.6 and $91.6 billion over the next full fiscal year. And the company's adjusted EPS is projected to grow between 17.3 and 19.2% over the next year as well, so a strong rebound from the lows during the pandemic. And from this latest report, the company has increased their dividend by 5% on an annual basis, which is incredibly impressive. For this blue chip company, I love collecting my passive income from this holding. They're one of the larger sections of my personal portfolio, and I will love to take this 5% annual dividend increase. I get more passive income without having to do any more work. And if we take a look at their dividend info, a 2.5% current yield, a very sustainable payout ratio of only 42% of their net income, and they've been growing it, averaging over 6% over the past 5 years, and their growth streak currently sits at 58 consecutive years, plus add their increase from their latest report, they now have a 59-year growth streak of total dividend increases, which once again is very impressive. So Johnson & Johnson was the third dividend king we're going to go over in this video. They just reported their latest quarterly results as well, and like we saw, all three brands beat for both revenue and earnings expectations. 2 of the 3 increased their latest dividend, and the ones that did were the 2 companies that I owned in my personal portfolio as well. I do own Johnson & Johnson. I have 21 shares with a market value right around $3,500, and I do own ticker PG as well, which of course is Procter Gamble. I own 22 shares with a market value of around $3,000. So these are 2 dividend kings I plan to hold for the long term. I have no intention of ever selling. I will continue to build out these positions, collect my growing passive income, reinvest the dividends, and overall watch a portfolio grow for the next 10, 15, 20 years in the future. And now we're going to wrap up the video. I want to thank you for watching to the end. Of course, nothing too spectacular in this episode. We just went over 3 of the top dividend kings you can buy right now, took a look at their latest quarterly report. So they all performed very well over the past 3 months. And going forward, I think all 3 brands will continue to slowly grow for many years to come. So thank you for watching. Please hit that like button and subscribe if you already haven't done so. And I will see you in tomorrow's episode.